The committee decided to further tighten monetary policy as follows. 1. Raise the MPR by 400 basis points to 22.75 from 18.75%.
Energy. I went to the university for 4 years so that I can break down complex economic terms into easy bits for you. My name is Wole, and in today's video, I will be telling you how the recent policy decision by the CBN is going to impact your life, how it is going to impact your business. I understand the country is hard, and that is why I will be buying breakfast worth of 10,000 naira, or just simply giving you the 10,000 naira in cash to one of my subscribers. Make sure you watch this video till the very end. I will tell you how to qualify for that breakfast or 10,000 naira later in this video. So the Central Bank of Nigeria met last week and they decided to increase benchmark interest rates from 18.75% to 22.75%. The thing is, most people are out there going about their business, going to the clubs, going to the markets. You don't know how this thing affects you. You don't know what to do so that you minimize the impact this policy decision is going to have on you. And you know, ignorance is not an excuse in law. Before we get started, if you are new on this YouTube channel, I want you to hit that subscribe button and please like this video so that more people get to see this kind of content. Now, the key takeaway from the MPC meeting, MPC means Monetary Policy Committee. That is the apex body that determines the monetary policy of Nigeria. They met last week Wednesday and they decided to 1. Increase interest rates from 18.75% to 22.75%. A 400 basis point increase. 400 basis points also mean 4%, right? They also decided to increase the cash reserve ratio of banks from 32.5% to 45%. They retain liquidity ratio of banks at 30% and they increase the asymmetry corridor around the MPR. Ignore these jargons I just read out for you. The one that will impact you are basically two: the cash reserve ratio of banks that the CBN increased and also the interest rate that they hiked. For starters, why exactly would the apex bank increase interest rates? The primary responsibility of the central bank of any country is to ensure price stability. And basic economics 101, the general increase in the price of goods and services over a period of time is what you call inflation. In a layman word, it simply means that more money are chasing after few goods. What that indirectly means is that there is a lot of money supply in the economy, and the central bank or the government will just look at inflation skyrocketing. The kind of inflation we have in Nigeria is what economists call galloping inflation. Inflation figure is currently 29.9%. The government will just sit down and watch that figure go ballistic. What they do is they sit down and they look at the variables. Okay, we see that you guys, you really have a lot of money to spend in this economy. You know what? We are going to stifle that money supply in the economy. We are going to bring down the level of money supply in the economy. And the way they do that is to increase interest rates. By the way, where una dey see this money? So generally speaking, there is a positive relationship between interest rates and inflation rates. If inflation rate is going up, then the central bank of any country would increase their interest rates. And the reason they do that is because they want to reduce the amount of money supply in the economy. So you make it very difficult for businesses, for individuals to borrow money from the bank. And by the way, I've started explaining how this thing is going to affect you. Now, because interest rate has been increased from 18.75% to 22.75%, it becomes more difficult to gain access to credit facilities from the bank. You might be wondering, why exactly is that so? It's very simple. Banks will begin to increase their PLR. PLR means prime lending rates, because banks also borrow money from the central bank, and currently the minimum rate at which they can even borrow money from the central bank is 22.75%. Now the bank also will increase the rates they charge on the loans they give you. Does that make sense? Currently, if you want to go to the banks to borrow money, they might be charging you 25%, but because of this recent policy decision, they are going to increase that rate. They can take it as high as 35% or 40% interest per annum on the loan they are giving you. Tough time for business owners. It is really going to cost you an arm and a leg to borrow money for your businesses. Then the impact on exchange rate. But before I explain that, quickly like this video if you are yet to like it and subscribe to this YouTube channel. Let me quickly tell you the factors that are causing this increase in inflation that we are currently seeing. The number one factor is the exchange rate crisis we are currently having in Nigeria. Remember that the Central Bank of Nigeria floated our exchange rate, meaning the market, the forex market in Nigeria now operates on a willing buyer, willing seller basis. But the problem with that is there are a lot of willing buyers, but there are no willing sellers. What that basically means is that more people are demanding for the dollar, but there is not enough people to supply those dollars, which is making the exchange rate go up. The parallel market rate in Nigeria is currently 1,600 naira per dollar, and it went as high as 1,900 naira per dollar last month. And this is a cause for concern for the government, right? They want to bring the exchange rate down, and that is also part of the reason why they increase interest rates. Because if you increase interest rate, you have to also increase yields on your debt instrument. So the treasury bills government issue, the bonds government issue, the OMO security, OMO means open market operation securities government issue, the rate, the yields on those securities to have to go up. Because Nigeria is an import oriented country, because we hardly produce anything, you need foreign investors to come into your country to supply dollars so that your exchange rate can stabilize. And the only thing that would make a foreign portfolio investor want to come and invest in your economy is for you to give them high yields on whatever securities you are making available to them. So we are likely going to see more foreign portfolio investors coming into the economy. Last year alone, the total foreign portfolio investors inflows the country received was $3 billion US. But this year alone, we've had over $2 billion in foreign portfolio investors inflows. As long as you can keep the yield high on your debt instrument, they are going to come. Also, another reason why the central bank increases interest rates is to encourage saving. So that money you would typically spend on frivolities, on Hennessy, on Azu, the one you send to your side chick and to your main chick, all this money, you would want to convert that money and put them in investment, put them in government securities, because government securities is currently at 19% in Nigeria. Meaning if you set aside 10 million for investment in treasury bills, you'll be getting like 1.9 billion in interest, which is almost risk-free. So can you see what the government is trying to do? They want to mop up money in the market. By the way, the current money supply in the economy in Nigeria is 93 trillion naira. It used to be 65 trillion naira some 6-7 months ago, meaning there is more money in the economy. Again, where una dey see this money? I had mentioned earlier the things causing this increase in inflation figure are: one, exchange rate crisis, which makes up 50% of what is causing our inflation, followed by money supply. Money supply makes up 25% of the catalyst that is making inflation go up. Then the next is supply side factors, meaning structural deficit, bad roads, electricity, stuff like that. That makes up 15% of the catalyst of what is causing inflation to go up. Then increase in fuel price just makes up 5%. So if government can solve the exchange rate crisis and also mop up money supply in the economy, they are going to bring down inflation figure. If you are finding value in this video, I want you to hit that like button and subscribe to this YouTube channel if you are yet to. But the flip side to the rate hike is that it's going to increase unemployment rate in the country. Remember, I told you that companies will find it more difficult to borrow money from the bank, and they are definitely going to lay off workers because now they are going to incur more cost in running their business. Your employer might just call you up tomorrow and tell you, Cynthia, we like the work you are doing in our company, stellar performance, you are a wonderful lady. However, I hate to break it to you, we have to let you go. No, Cynthia, it's very difficult for us to borrow money from the banks. Yeah, the cost is high. In fact, as I'm calling you, I am shedding tears. No, don't worry, don't pack your bags. We'll send it over to you. I am so sorry. Bye. So, unemployment is likely going to go up. Unemployment in Nigeria is currently 5%. It used to be 35%. But the NBS, the National Bureau of Statistics, they did a recalculation of that figure and it is currently 5%. Anyways, that rate is likely going to go up, right? So have multiple streams of income. Yeah, I earlier said I will buy one lucky subscriber a breakfast of 10,000 naira or simply send out 10,000 naira to you. So if you've made it so far into this video, what you can do to be that lucky winner is for you to go into the comment section of this video and tell me how you've been coping with this economy. I'll pick a random winner. Anybody his story or her story resonates best with me is the person I would give that 10,000 naira, and I'll be announcing the winner in my next video. And lastly, let me wrap up on this note. Personally, I don't feel the prices of goods would come down, and the reason I'm saying this is because the companies that are finding it difficult to produce goods, they will simply pass that cost to the consumer. We are in Nigeria where over 60% of the population is living below the poverty line. I read somewhere that 90% of Nigerians don't even have up to 100,000 naira in their account. Can you just imagine? Now, I understand the government is trying to mop up the money in the economy, but the money is concentrated in the hands of the few. In economics, there's this economic indicator we call the Gini coefficient, which basically measures the level of inequality in an economy. And you will see that there is a wide gap between the have and the have-not in the economy. And because this money, the wealth of the nation, is concentrated in the hands of a very few, even if you hike price, they will still be able to afford it. On a final note, make sure you are buying things in bulk. Make sure you are saving your money. Make sure you are investing your money in government securities. The rate is still going to be higher than the 90% I had earlier mentioned. Please invest your money. If you have made it to this part of the video, please like the video and subscribe if you are new. Also join my Telegram channel. I will leave the link to join in the description of this video. Follow me on IG, follow me on TikTok, follow me on Twitter. I will leave the links to follow in the description of this video. Till I come your way again, signing out, your boy, the ball hedger. Bye bye.